What is up, guys? It's KOJOFOREX, aka Sniper Trader, aka Emperor of Blues, aka GBP Emperor, right? You might have been wondering, what is all this Emperor of Blues, Kojo? What is going on, right? Now, I literally changed the King of Blues to Emperor of Blues, literally because the whole of 2022, I have not had a stop loss since. I personally deem it as a legendary thing, and then because of that, I decided to now level up from that King of Blues to Emperor, because we know that, in that level of kinship, Emperor is like, the maximum. So like, yeah, that's just by the way anyway. So today I'm going to share with you guys 4 main principles that is going to take your trading to the next level, right? So you can call it a rule, you can call it like, trading don'ts, because it's typically me telling you things that you do not need to do to take your trading to the next level. Now, these 4 things that I'm talking about, they are practically psychological, right? They are not necessarily technical, but if you learn them and apply them technically, they're going to literally change everything, the way you think about the market. So with me, I can stay away from the market for 2 days, 3 days, sometimes even a whole week, and I get people wondering, what is going on, Kojo? You're not trading. I don't see anything coming up with you. It's only because I'm literally playing according to them, and then they have not necessarily given me any indication of taking any trade at any point in time at all. So I'm sure at this point you might be wondering, Kojo, what exactly are these 4 rules, and then will you just give us into the feed of them, right? So before getting into the technical part of this video, let's get into these 4 main points. So number 1 of the 4 rules is do not trade in the middle, and then number 2 of it is do not place your stop loss in obvious zones. Number 3 of it is do not jump in front of a moving train, and then number 4 is do not join the party when it's late. Now I know that it may sound a little bit confusing. Kojo, what are you rattling, right? Now jot all those points down, just all those 4 major key principles or trading don'ts down, and I'm going to go right into the technical part of it and then break it all down one by one. And at the end of this video, you realize that if you follow these things that I've listed religiously, it's going to make a massive difference in the way you look at the market. And trust me, you're really going to appreciate coming across this video randomly if you're not even a subscriber. And if you haven't already subscribed, make sure to smash that subscribe button, and also leave a comment if you really enjoyed this video and then you appreciate it and you want me to do more. Make sure to also follow me on all social media. Don't forget about that, and clicking the link in the description to join the KOJOFOREX Telegram community, where I drop a lot of trade, and my community members, which has over 27,500, make a lot of money for free. So guys, let's get right into the chat, and I'll break down all these points that I broke down technically. Yeah, so guys, if you've been really following what I've been describing from the beginning of these lessons, I said we're going to be following 4 main trading principles, which is like the don'ts of trading, that if you follow, like I believe, is going to really level up your trading. Number 1, I said do not trade in the middle. Number 2, I said do not place your stop loss in obvious zones. And number 3, I said do not jump in front of a moving train. And number 4, which is the last one, I said do not join the party when it is late, right? So we're starting with do not trade in the middle. So you might necessarily be wondering, Kojo, what at all do you mean by do not trade in the middle, right? So what that really means is that as a trader, if you're looking at the market technically, you want to join the trend of the market around the beginning of the trend, right? So what do I mean? We all know that the market will usually create high lows and move in a very random fashion. It can go up, come down, go up, come down, and something like that, right? So it's literally creating trends in the market. But you do not want to be that trader who have seen this start from here within this range and not able to really find any fine-tuned area or region to jump into this trade and literally start to find an entry around here, right? Now technically, what does it mean? We can apply this to looking at something like this, right? So if you're looking at a chart like this, we can clearly see that this market started trending down and then hit this rock bottom, reversed, and then started going all the way up. As a technical trader, we're looking at the fact that if you want to jump into a trade like this, you're looking to jump in around anywhere within this range. Now, as to really waiting for the market to get into this point and trying to jump in here. So what is the reasoning behind trying to jump in here and not here, right? So that's exactly what we're going to look at briefly right now. So the whole idea of wanting to jump in early and not at that point that I literally showed you is because if you're trying to jump in a trade around this region, what you're doing is that you're giving yourself that exposure into the market, which can easily wake you out of the market before it comes into the zone it's supposed to go into. What do I necessarily mean by that? Because the whole idea is that if you're trading within this range, you are literally saying that you have a good reason for jumping into this market for a buy position. You know exactly why you want to buy this trade. Now you're looking at buying into any of these regions, right? And then you didn't jump into the trade anywhere from here, and then for some reason you're now trying to jump in around here. Right now, if you're trying to jump in around here, all you're doing is that you're not going to use any solid technical reasons to place your stop loss, because if you're trying to jump in here, You're saying that, okay, I'm buying here, I'm expecting this market to go perhaps towards the next resistance, next level, whatever it is, right? Now you're jumping in here. You would want to use some pip value to set your stop loss, right? You would want to use some pip value to set your stop loss. You may think, okay, for this trade, let me set a 30 pip stop, let me set a 35 pip stop, let me set a 20 pip stops, right? As to doing the right thing, which is placing your stop loss below that level or that zone, which is like somewhere around here. Now if you're placing your stop loss at the right range where you should, which is below the range, obviously this tells you that you're not really taking a trade that makes sense risk to reward wise. So now you're literally locked up into the space of setting stop loss based on your own sentiment, which is like your pip value sentiment, right? And then placing your stop loss in the pip value sentiment, you're placing your stop loss not where stop loss needs to be, right? That's what we describe it. So placing your stop loss here, anything can happen in the market. What can you do? Literally maybe a wick coming up beneath this range, a little bit like a new candle coming up, like let's say particularly with what happened here, right? If you zoom in closely, you're not wrong that the market is going to go up, but based on you jumping in the middle, we have this small wick here literally taking you out of the move, right? We have this small wick here taking you out of the move before the market continues. So you're going to come back later and be like, oh, I lost this trade, I lost $100, I lost £100, I lost 200, 500 pounds, and then this market literally went after it took me out here. It's because you didn't place your stop loss where stop loss needs to be, and then you traded the market in the middle. So the significance of not doing that is that if you place your trade at the bottom of the range, right, which is like trying to jump in here and then putting your stop loss beneath the range, let's say somewhere here, right, all you're trying to do now is that you have marked out a caveat for a good reason of why you would be wrong if the market comes into this zone, because you're literally seeing maybe a whole of rejections, a whole of price action going on here. Your conviction, technical analysis and perspective is telling you the market is going to go up from here, but you're only going to be wrong if the market continues to trade beneath this range. So you have a good reason to set your stop loss into a pip range beneath the zone, so that when the market eventually does not really go in your favor but comes down to hit you out, you know that perhaps it is not where it's intending to stop. It has a good reason to continue. So you have a good explanation as just leaving the option to a small pip, you know, a candle wick coming down to pick you out and then continuing in the direction you had already perceived. So that's the point one of not trading in the middle. So the next one, guys, is not placing your stop loss in obvious zones, and that's pretty much a straightforward one, and we're going to look into that quickly. I'm going to use gold to denote that example. So not placing your stop loss into obvious zones is that, look, let's say for instance we have gold here, we have this resistance zone here, we have resistance 2 here, 3 here. Even though the market didn't come right into that range, we know that it came very close to it, and then we have resistance 4 here. So perhaps you're looking at, okay, maybe gold is likely to reverse around these regions, right? So you've marked out a region that you believe that gold should certainly reverse in that zone, and then you're trying to, like, you know, sell into this zone, right? Now you see some formation, some confirmation, whatever it is, and then you're trying to place a sell in this trade, right? So for some obvious reason, somebody's going to say, oh, gold is quite pricey, expensive, so I'm not going to set what's the name, a huge pip stop loss. I'm going to really tighten my stop loss when I sell into that zone. And then instead of placing stop loss where stop loss needs to be, they set stop loss in obvious zones, right? So instead of putting some few pips above the range, then they put it right into the range like that. So what happens is that gold is going to come up, pick you, and eventually comes down. So you really don't want to fall into that trap of placing stop loss in obvious zones, right? You really want the market to come into the zone, react around there, show you some signs, start reversing the opposite direction. Then you want to confidently place your stop loss above that range, in the sense that for whatever reason of manipulation, you've given the market some room to breathe, and then you will likely not fall into the trap of being taken out of the market before the market actually goes in your direction, right? Now, if you're a price action trader and then you really follow the scale of candlestick, then you're likely not really fall into that stop loss of your zone, because for the most part, you're actually going to wait for certain confirmations and some bullish or bearish presence, and once the market sets into a particular direction before you even look into even jumping in on a trade, right? Rather than just you trading the market blindly, the moment it's set into a zone, then all of a sudden you're starting to buy or you're starting to sell, right? So the third one, guys, is do not stand in front of a moving trade, which has a slight similar meaning to the earlier points which I made, which was basically not trading in the middle. So guys, I'm going to use GBP JPY to denote the point of do not jump in front of a moving trade, right? So it's very simple. What do I mean by that? Let's look at this. Literally stopping here, right? You're likely to see that, okay, GBP JPY, we hit into this support level. So as a trader, you're practically thinking this thing could easily rise up from this range and then go up again, right? But what you're literally doing is that you're standing in front of a moving train. What do I mean by that? This thing is basically trading bearish, and what makes you think that standing in front of a moving trade, which is literally coming in with a buy position, is what is going to reverse the market onto the upside without seeing any signs and signals which is indicating that this thing is going to be bullish, right? So you jump in for a buy, right, standing in front of a speed moving train. What do you think is going to happen to you? You're going to be wrecked, you're going to be broken. It's going to really run into you and then break your bones into pieces, just like it did when I played this. You get it? So with that, you don't really want to stand in front of a moving train, which is like a trade that has set forth in a particular direction, and then the momentum is high and the volatility is high, and then the trade is really going all the way up or all the way down. You don't want to be that one person with your $100 account, $1,000 account, and think that with you coming in for a buy, then the market is supposed to reverse. You're totally killing your account and killing your psychology as well. So the last one also, guys, is do not join a party when it's late, which I said has similar characteristics to the earlier point I made, right? So I'm practically saying that, look, you saw, let's say, GBP JPY start from here, right, and then it started, you know, trickling down, coming down, creating those lows, right, all the way from here. This candle closed, the next one closed, the next one closed. It's literally coming down, and then you do not really jump into this trade all the way, and then it gets to somewhere here and you're thinking, ah shit, I literally missed on this point, but one way or the other I'm going to squeeze some pips out of this market, so let me also add some few pips to the sell, right? You literally jump in for a sell. It could work for you sometimes, right? But for the most part, you literally watch the market trickle all the way down, gets to this point, and now you're now looking to sell into it, right? In this instance, yeah, it may have worked for you, but let's look at instance where it worked in the opposite direction, which is like, let's say you looking at the fact that you could have bought all the way from here, but you didn't buy here, you didn't buy here, and then here is where you're looking to buy, and then trying to put your take profit around here because you're thinking that, oh, this thing is going to break this zone, it's going to continue all the way up, right? So what happens? You place a buy trade here, your stop loss beneath the range, and all of a sudden, so this is how practical it's going to look. The stop loss here, you're thinking this market is going to continue all the way up. It starts off giving you a little profit, right, making you get excited, or you're in some small blue, and then what happens thereon, right? Literally changes the whole direction and puts you into a loss. So you waited for the market to go all the way up from that zone, went into a high range, and then you're now jumping into a party when it's already late, right? All the juice has been squeezed out of the market before you're trying to even make some profit out of it. So yeah, this is my 4 main principles, and I truly believe, like I said from the beginning of the video, that if you follow these rules religiously, you're going to take your trading level from 0 to 100 real quick, right? So without wasting much time, I hope you guys really enjoyed this content. If you did, make sure to subscribe to this channel if you haven't done that. We're on the road to 100k subscribers. Also follow and connect with me on all social media platforms at KOJOFOREX KOJOFOREX, and make sure to particularly follow me on Instagram. That is where I'm most active on. Click in the link in the description to join the KOJOFOREX Telegram community, a community of traders where we're gradually growing. I share trades there for free for everyone. Currently around 27,500, and we're looking to hit 30,000 soon. And yeah, once again, I hope you enjoyed this content. Don't forget to subscribe, and I'll see you guys in the next one. Peace.